Hey guys, it's Joe Rapisarda here over at Pacific Community Lender, and today I want to share with you 10 reasons why the VA home loan is awesome. And I usually think it's one of the best loans out there for buyers. And so if you are eligible for the VA home loan, you have to be in the military or have served, it is one of the best ones out there. So why? So number one is it has a 0 down payment. You can get in with no money down. Number two is it has super low interest rates, some of the lowest that you'll find on the market anywhere. Number three is it has no monthly mortgage insurance. Other loans, when you make less than a 20% down payment, you're going to have mortgage insurance, or what's called PMI, private mortgage insurance, on a monthly basis of anywhere from $200 to $500 or more a month. So VA does not have that. VA does have a VA funding fee that we'll talk about here in a minute. The lender, seller, or credit for cash to close. So VA does have cash to close, but the lender or the seller can pay for that. In this market, or the current interest rate market we're in, sellers are not paying closing costs. But the lender can, we're one of the few lenders that can do that by paying a slightly higher interest rate. So the buyer, you as a veteran, can get in with 0 down payment. Another benefit, number 5, is the higher debt to income qualifications that you can get on the VA home loan. So VA allows it to stretch up higher as far as qualifications go on your debt to income. Your mortgage payment plus your bills has to be a certain percentage. On VA loans, it allows you to stretch up, which means veterans can qualify for more than other clients can. Number 6 is credit. VA is very lenient on credit. So if you have a derogatory, such as a bankruptcy or a foreclosure or something like that, you are only out of the game for about 2 years, and then you can get back in it. Other loans, like FHA, is about 3 years. So conventional loans can be anywhere from 4 to 7, depending on 4 years on a bankruptcy, 7 years on a foreclosure. So VA is the quickest way to get back in it after a bad credit time. Number 7 is student loans. Student loans, if you have student loans, VA is much more lenient on the calculation of that debt. Even if it's deferred, it's very lenient on to help you out to qualify. Number 8 is no funding fee. So if you have a 10% or more disability, usually active veterans don't have any disability because they don't want it to slow down their career by showing that they're hurt. But anyone who's out, a lot of times they go in and get their disability. If you have a 10% or more, you're exempt from the funding fee. We talked about earlier with the PMI. If not, your first time use of your VA loan is a 2.3% VA funding fee. And it's basically, that's financed into the loan based on the loan amount, and it gets financed in. It's an insurance premium that doesn't protect you, it protects the lender from you foreclosing on the house. And it's what VA says to you, to everyone, going, hey, go ahead and lend to these veterans, and if they default on the loan, then we will cover you your losses to the bank on what's going on. It's 3.6% anytime use thereafter. Number 9 is a spouse. You can have your spouse can qualify with you even if they are not a veteran. If you are not your spouse, then it would have to be another veteran who has their own eligibility, and we can share those, and I can help you with that as well. And number 10 is another benefit for VA is that people that come in here is that you have to be owner occupied when you purchase the property, but if you get transferred or PCS'd out somewhere else, you can leave that as a rental. And you got in with 0 down, hopefully you got a lot of appreciation. You can leave it as a rental, go to your next place, your next duty place, and buy another house that way. Obviously you cannot only use the VA at one time on one loan at a time, but if you're smart, you get up and get enough equity, refinance that into a conventional loan or a different one, and then you use your VA again the next place, and you can buy one and one and one every place you go, and that's a good way of building up a rental portfolio over the country or wherever you're going. But feel free to, or you could also sell that and take the money and buy a bigger place in the next one, which a lot of people do as well. Anyways, if you have any questions, reach out. I'm your guy here in Solano County in California, Joe Rapisarda, and right next here to Travis Air Force Base. Talk to you later.